G'day guys, Ben and Simon here. Welcome to another episode of the Pumped on Property Show. And today I am sort of pumped on this one. So pumped that I had a couple of rants on there as well. Sorry about that, bro.
No, I loved it, man. It was a really good podcast where we kind of just went down the rabbit hole of a few different things. And, you know, the essence and the idea of this podcast is to explain how you can become financially free and the steps that are involved and how we're moving through that journey, what we've learned over the years and what we intend on doing moving forward. We get real deep into, where do you want to be in the future? We touch on where you're at right now and what you need to do next, but we spend a lot of time on the things that have held us back in the past and how we've actually overcome those challenges. And we spend a lot of time talking about the external situations that you have experienced over the last 12, 13 years since starting investing as well, which is where we kind of go down that rabbit hole, which talks a lot about different external factors that have come up, but, the long-term averages have still worked out really well.
That's right. And, we wrap it up with a few different ideas around how you can get from where you are today to financial freedom. Like, Simon's sort of gone through this journey with a really, really clear idea at the start, one slow step at a time. I sort of went at it like a bull at the gate at the beginning, ended up with 9 properties, selling it back to 2 of them, and then have rebuilt a portfolio based on my intention of capital growth, cash flow, making some money on the way in and on the journey of the property, and then timing the market. And most importantly, I think we show you guys, the stuff that we've been through and the mistakes in this one. And that's important because I've fallen again. And there's been times where we've had anxieties and stresses, but, we're more optimistic at the moment than we've ever been before about where things are going over the next 15 to 20 years, and just super excited and hope you guys can capitalize on that.
Yeah, let's get stuck into it.
Awesome.
Easy.
So I think the first part to all of this is figuring out where you want to be. And there's 2 pieces to that, really. There's the financial side, and then there's the actual exciting side, which is the lifestyle side. So when I say to you, when you're thinking about financial freedom for you and Tay, which we were talking about this morning, what does that mean financially? And then what does that mean for lifestyle too?
To start, first for myself, I always start with lifestyle because that's what I'm looking for. The reality of the world is finances are important. Money does make the world go round, so we need that. But I just need enough money to support the lifestyle that we want. And we were just talking off camera, and what's really exciting for me is I'm not looking to be crazy wealthy or to have a lot in the future. I just want choices. I want a house where I can walk down to the beach. I want a big piece of land where I can grow my own food. And then I want to have enough money to sustain that lifestyle, where I can just have choices to go on holidays whenever I want to, wherever I want. But most of my goals in life are just to have a nice, happy lifestyle and just to be able to not stress about money all the time, be able to do the things that fill my heart and bring me the most joy, which is spending time with the people I love, doing meaningful and purposeful work, and doing the things that I enjoy doing, like my hobbies, surfing, yoga, soccer, training, whatever it might be.
Come back to soccer.
Maybe one day. Ever since you said that the other day, I'm like, I could totally get back into it.
Been watching too much Champions League, and too much YouTube. I'm going back. Night 1 last night.
It's good to know that you've had a 10-year hiatus away from outdoor soccer.
14 years.
14 years, and I'm like, okay, cool. I'm about 5 years out now. I got a little bit of time before I need to come back in. But yeah, it starts with lifestyle. But then when I look at the financial side, that's the reality that I need. And for me, it's 3 properties owned completely outright, along with my home owned completely outright, and then a lifestyle property owned completely outright as well. I've been getting into some pretty crazy stuff recently about the issues that are happening around the world with the soil degradation and the food shortages that are expected within the next 20 years. And it is making me a little bit worried. So one of my goals, I want to get a big 100-acre piece of land where I can harvest my own food and things like that. And that's something that's really important and becoming more and more and more important to me as time goes on as well.
I love that, man. Just to speak to that, did you ever see that David Attenborough doco?
Yeah.
You know what I just love that because you saw what they were doing. I think the Netherlands has become like a net exporter of food now.
Yeah.
And it's like one of the smallest countries in the world, and they're just growing everything in shelving in warehouses under lights. And I'm like, I just feel so excited about the future. Like
100%.
I feel like we'll figure it out as humans. Unfortunately, as always, it's too late, and we've been trashing the soil for 100 years, but it's like, or for 50 years at least. But
we like to test ourselves. We like to test ourselves and figure it out. But that's just a little bit of a side topic anyway. And then so like with that, like I'm hoping that by the time I own those 3 investment properties completely outright, I'm hoping that they're going to replace at least $150,000 worth of gross passive income for me. So nothing out of the, like nothing over the top. I know that might be over the top for a lot of people, but for myself, I feel as though, you know, over the next 15 to 20 years, I can slowly but surely chip away at that plan. It's not something that I'm looking to acquire tomorrow. It's not something that I'm looking to acquire in 5 years or even 10 years. It's something that I'm going to be working towards for most of my adult life because I enjoy working and I want to contribute and I want to have meaning and purpose, and that's just as important as everything else as well. So it takes a heap of pressure off.
I love that, man, because it is funny, like how you say, I just want to own my own home, 100 acres and 3 properties outright. And it's like, I remember 5-6 years ago when you were finishing uni, and could you like have thought that that sort of stuff would be coming out of your mouth so easily, but not just like the idea of it, the 100% I'm going to do that, and you know exactly how you're going to do it as well.
100%. I can't even explain how much has changed over the last 5 years, and that's why you just got to trust the process and just do the work. I think it's so important because, you know, setting those goals 5 years ago with you when we were developing the strategy to starting to execute the strategy, things change really quickly, and that's really exciting about the world, and you know, you've got to be willing to adapt and change and move, and 5 years from now I'm sure those goals will change again, and that's completely cool as well. But like, where does it start for you in terms of lifestyle and finances as well?
Honestly, man, like I'm living like my financially free life now, like in my mind, because I'm doing what I want to do, which for me it's super simple, the same as you. It's family, absolute number one, doing meaningful work, looking after myself, hanging out with people that I enjoy, and traveling. And so it's like that gap between how I saw my lifestyle 5 years ago and how I was living then versus how I'm choosing to spend my time now. And 5 years ago, it was make more money, buy more investments, work harder, get better. And now it's like, you know, get better slowly every day over the next 40 years is the goal. Like, move a little bit better each day over the next 50 years. Like, and become a little bit of a better dad. And it's like, that is my new norm, and that's my benchmark. It's changed.
And I think why it's so easy for us to talk about where we want to be in the future is, you know, 15 years ago, you planted the seed in your mind. Like, where do I want to be in the future? What type of life do I want to be living? What type of financial position? And every single month for the last 15 years, you check back in with those things. And over time, things start to work out, and you don't need to spend as much time planning for the future or executing those goals because you've done the hard yards. And I think that's something that people can take out of this. And I've done the same for the last 5 years. I've really spent that time thinking about where I want to be in the future and thinking about the lifestyle that I want and thinking about the choices that I want to have in my life. And every time you change, you might change it a little bit, but the underlying fundamentals and values are still there. But every single year, you know, I sit down and I really think about what I want to do for the next year and how that's going to get me to where I want to be in 5, 10, 15, 20 years from now as well. And that's a habit that both of us have implemented. But if you want to become financially free, I think it's important to have that habit where you're constantly checking in with yourself. Where am I at? Where do I want to be? What's changing? Because how much of your values and lifestyle and goals changed over the last 15 when you first set them?
Man, honestly, when I set my goals 15 years ago, I was exactly the same person that I am again now. I just went through 15 years of fucking around to get back to actually not taking everything as seriously as I was, like becoming the version of myself that I was. Like, I feel like there's this quote that I've had on my vision board for the last 3 years, which is a Bruce Lee one, and it's not about the daily increase, it's about the daily decrease. Hack away at the unessentials. And I'm rereading this book at the moment, Rest, and I just reread Slow, and I'm like, no matter how like much of your lifestyle is geared towards like your value system and making decisions towards the person that you want to be, just shit comes up and you forget. Like, you know what I mean? Like, I got on the beers like 5 times in 2 weeks earlier in the year, and it sort of bumped me off my course for a little while, and I was a bit anxious. I wasn't training as much. I was sort of a bit more like worky, and now I'm like, hang on, like, I want to work 4 days a week. I want to contribute. I want to show up on every call and make it an amazing one. Same as you, I want to help people, but I also just don't want to give as much of a shit about stuff as like I have, you know what I mean?
You've got to pick the kids up from school.
For sure. And so there's this incredible quote that we both love from Jim Rohn, and it's, you know, it's not the blowing of the wind that determines the destination, it's the set of the sail. And I think that's so important for Simon and I, because as like much as I want to like live my day-to-day in flow and as present as I can, there hasn't been a year in the last 20 years where I haven't known before the year started exactly what I wanted to achieve.
Yeah.
And some years I'd achieve it and some years I'd miss it, and that's completely part of it.
Life.
But, you know, one of the commonalities between people that get free is knowing where you want to be. So when we talk about the financial side, for me, I know I want 200 grand a year of passive income and my own home owned outright, and I'm going to get it. It's just going to take time now. It might take another 5 to 10, 15 years. I just don't know.
Yeah.
But I know that by doing this daily activity, I'll get there.
Yeah.
And then I know that this year I have to renovate a house that I just bought, which I'm doing right now, and I have to pay off some debt. And it's like, that's
part.
it, you know what I mean? And outside of that, it's just keep getting a little bit better. And it's like, there's not that much pressure on this stuff when you actually make it that simple.
Yeah, I think we all try to overcomplicate things just to... I have no idea why we try and overcomplicate
human mind,
things.
man.
It's human mind, that's right.
Yeah.
But having that clear line in the sand, okay, this is the base level of where I want to be in the future, and this is what I'm going to consistently work towards. And then the next thing you need to look at on that journey to financial freedom, because it's a tangible process that you can implement, is looking at exactly where you're at right now. And the easiest way to do that, and what me and Ben do, is organise a meeting with our mortgage broker, send him all the documents that we need. Hey, Paul, can I buy right now? Yes, great, take action. No, save.
That's it. Can you borrow money? Yes. Then is it the right time to take action? Yes or no?
Yeah, true.
And then can you borrow money? No. Sweet. Why can't I borrow the money? Because your income's not high enough, or because you don't have enough savings or equity. Sweet. Wait. And it's like, I just don't know why. I spent years, like 10 years of my life, putting so much mental angst on myself because I didn't understand I was either buying or waiting.
Yeah.
I was just always trying to buy. And I'm like, I couldn't buy for 7 out of 10 years.
Exactly. And it's just coming back to the age-old saying about investing. It's about time in the market, not timing the market. So everybody's trying to pick the true bottom, you know, avoid the top and all of these different things. But it's just like, if you can get into the market safely and hold for the long term, you look back at history and man, it's been good. Like even you bought your first property straight after the GFC at the top of a cycle. It works out over time.
It worked out, yeah. And now that I look back at the things that I learned, like, it's good to buy when other people are scared. Like, I actually really like that environment. Something about my nature, I think it's the bargain hunter. It's just like, I like the deal.
Yeah. It's experience. You've done it so many times.
Yeah, and then, you know, watching people's perspectives change. Like, I've seen, you know, Commonwealth Bank in 2020, who's expected to be like the gospel of all truth, suggest that property prices in that year were going to decline by 30%, and they went up by 20%. I've seen other global commentators come out and completely reverse their situations, and I've seen people completely get it wrong and people get it right. And it's like, well, if the best in the entire world get it wrong, then we just can't pretend that we're going to get it right. And so it's like, there's trends around the movement of money that you can use to your advantage, but most of the time, man, it's just buying, holding, and then, you know, using fundamental numbers, which we talk about later on in this video, plus others, like, to just make the best decision you can at the time.
And that's what it's all about. It's just trying to make the best decision at any given time. And one thing that we've done is we've worked through a lot of the things that have held us back. We've worked through a lot of the challenges that we've faced, and basically just through experience and education. You know, reading all of the different books, listening to all of the different podcasts, reading every single article that comes out every single month for an extended period of time. And all of this gives you that mental clarity that you need to make that right decision. But all of us have things that are holding us back as well. Like, all of us face those challenges. Like, we've been through some weird times over the last 5 years where you fall off course and you like think you're going to go down a different path and you just got to realign. But it's, you know, we are humans. We do have that monkey mind, and we are going to try and overcomplicate things and try and make it more difficult than it actually needs to be. And figuring out those challenges and having awareness of the things that do hold us back is really important in this journey to financial freedom, so that you are staying on course.
You know, I don't know anyone that's really working towards financial freedom that doesn't have, at some point during their journey, some form of depression, anxiety,
fear,
tantrums, like Lisa calls them. I like toddler tantrums and shit when I just kick the dummy because I'm stressed out.
Yeah.
And it's like, that's all absolutely going to be part of it. Like, one thing that we've been getting a lot for the last 3-4 months has been people going, well, I'm just going to wait till after the election. Day after the election, Commonwealth Bank comes out going, nothing's changed in our economic forecast based on this election change. And everyone goes, oh. You know, it's like this fear. Like, what were the things 5 years ago that were holding you back the most? Like, what were the things holding you back 12 months ago?
5 years ago, mostly it was education, a limited understanding of property investing and how to identify the right markets, the right cycles. Certainly financial situation 5 years ago, income and savings were the major things that were holding me back due to my stage of life. But nowadays it's been really just, I guess, external situations that do come up. For example, 2020, when COVID came around, we'd been doing some research and we'd been learning about the 18.6-year real estate cycle that Phil Anderson talks about. And we knew, and we'd been talking about the mid-cycle slowdown that was coming in 2020.
We were looking at that video this morning from 2018 June saying by February 2020 it was going to be bad. I was like,
that's great.
I love documenting this shit, man.
We knew it. We knew that it was coming, but at the time I'm like, I know this is a good time to buy, but
scary.
I was so fearful of taking action at the time, and I was so scared to get into the market. But I trusted the process, I trusted myself, and I just come back to the long term. I go, well, where do I want to be in the future? And I realized I want to be financially free. I want to be in my own home. And I'm like, even if this COVID situation is going to be a bit of a change to the cycle, you know, is taking action right now really going to impact my position in 15 years or 20 years from now? And the answer to that question was no, it's not. So it then gave me the confidence to go, okay, well, it is the right time to buy. Let's take this action. And fortunately, it has worked out. But at the time, there was a lot of fear, there was a lot of anxiety, there was a lot of stress and overwhelm that I was experiencing because of the unknown. But what I do when I'm in those fearful states is I come back to, well, where do I want to be? What life do I want to be living in the future?
Yep.
Is the decision right now going to impact my decision positive or negatively in 15 years' time from now? If it's positive, great, let's go. Let's go.
I love that. And then I saw you through that period go to fundamentals. So you could have bought Sydney, Melbourne, Brisbane.
Yeah.
But price-wise, Brisbane looked good for you. And then you went, well, what's the closest suburb to the city on the beach that I can afford? And then instead of buying the suburb that you could afford, maybe you looked for the suburb that had only done 2 or 3% per year for the 10 years leading up to that, with the lowest vacancy rate and the most potential upside between the cheap stuff that you were buying and the top end. And so that logic in those times of fear is what I come back to. Like, I find your perspective is to look forward and go, am I going to be better off down the line?
Yeah.
And my perspective is more like, I want to understand the situation, I want to understand the history, and then I want to use logic to make the best decision possible based on history, because I know if I follow that historical evidence, my future will unfold like it has for every wealthy or financially free investor, and that is taking calculated risk at the right time, and just instead of fighting the fear or running away from it, just completely sitting in it and going, this is really uncomfortable emotions, this is really uncomfortable thoughts that are creating the emotions, but I feel like this place at 315k or 360k is a fucking steal right now. And I can see the place down the road just sold for $1 million. Like, I feel like there's a good opportunity here.
That's right.
Some of the other stuff that I've felt as well when I was getting started originally, because we've got a good team now, like solicitors, building and pest inspectors, town planners, builders, property managers,
brokers,
tax people, like, you know, everyone. But when I was first getting started, I didn't have that team at all. And I was like Googling or getting referrals of people I didn't even know. And I got burnt a whole bunch of times through working with the wrong people. I got sort of stitched myself up on a deal in a regional town that I thought I'd make short-term money based on the advice of someone that I trust that made 100 grand off the build from me. And, you know, you go through these things, but the cool thing about going through them is you learn from them. You know, the good thing about a deep cut is like you remember it, whether you do mentally or your body physically does. And so you learn to make better decisions. And I think that's helped a lot as well.
And the beautiful thing over time is we've built those team of advisors out. We've aligned with people that align with our values and that understand our goals and that just want the best for us and really have our best interests at the top of their mind. And it's really important to attract those people into your life, because it can be a lonely journey being a property investor and working towards financial freedom, but it doesn't need to be. You can surround yourself with a really high quality community of like-minded people. You know, we've got an amazing bunch of team members that we work with, plus the partners that we work with, plus the clients that we work with that we can talk about all of the time. You know, we've got friends that we can have these really high level, deep and meaningful conversations with, and it can be challenging, but you've got to step into it. You've got to work, you know, you've got to create that situation. And if you're there at the moment, you're like, I don't have a community of like-minded people, I don't have mentor or coaches, you can go find them. You've just got to create the forum for it. And it might be, you know, going out to coffee with that friend that you have that's got a similar type of interest in terms of wanting to have a better future, in terms of wanting to become financially free. And you can sit down and you go, hey, like, this is what I'm thinking about doing. What are your thoughts on it? Let's have a non-judgmental, non-emotional, really open conversation and bounce some different ideas off one another. And it'll really help you kind of find the path and feel a lot more confident along that journey, because when you are doing it alone, those thoughts are going to come up a lot more frequently. But then when you've got somebody, like for myself, I've got you that I can lean on and know that you know my strategy, you know my long-term vision and goals, and we can constantly just check in with one another. Is this decision moving toward where I want to be?
Well, I mean, in 2020, man, like I went and put offers on 2 or 3 houses, and then every time you saw them, you're like, I don't think that's the right property for you. I think you can do better. Like, it's good. And that's what Simon does. Like, when someone is, you know, thinking about booking a strategy session, Simon gets to talk about where you're at, where you want to be, and the market. And then if we decide and you decide that you're going to become one of those small number of people we work with, then you come and have an hour with me and then another hour with another one of our team members who's an absolute legend and an accountant. And between the three of us, like, we're just deeply, deeply setting that foundation of education, logic and confidence to make better decisions.
100%. You know, and one of the things that I'm hearing a lot in these strategy sessions at the moment is most people are very worried about making a mistake. All of us are. Every single time we buy, I'm worried about making a mistake. So you've got to jump back into logic and data and history to help educate that. And another thing is people are worried if it's a good time to buy. Now, you've got a lot of experience, over a decade's worth of experience of analysing the Australian property market, studying the Australian property market, specific markets, specific suburbs, specific asset types. What have you sort of seen over the last 12 or 13 years since you've been, you know, really diving into this on a super regular basis?
You know, like, the biggest mistake that I ever made, according to like everybody around me, which was like not buying in Sydney for my second property and going to the Central Coast and buying a 5-bedroom home with a granny flat for $213,000 that was renting for $600 a week. that was a mistake. Like, according to my mentors at the time, who really didn't know what the fuck they were talking about, because I was seeking out the wrong people. Like, I'm asking someone who's got one property how I can become financially free versus someone who's financially free how to be there. But you know, you learn your lessons as you go, and they all said it was the wrong time. This is how it started in 2011. It's the wrong time. We're still going through a GFC. The stock market's stuffed. We're in the worst environment since the Great Depression. You shouldn't buy the Central Coast because it's never done anything. That worst mistake tripled in value for me over 6 years, and I sold it for a massive profit. You know, like, then comes, like, I suppose, like 2012, 13, 14, as I continued to buy properties, the market was just so fearful from the previous GFC, and prices weren't rising quickly in the property space. Everybody was saying, like, why are you investing in property? What are you doing? Then Lisa fell pregnant and we were going to have a bub, and I went from like a really good paying job to literally like my income becoming 1/5. Like, I think I was on 200k and went to 45 grand to move back to the coast, and I was just like, fuck. And people like,
lifestyle,
what are you doing? And I'm like, you're making a huge mistake walking away from that opportunity. And I'm like, well, I need to, because skills are the most important thing. And then from there, things started to get more serious, because 2015 was the first time APRA stepped in and made a massive contraction in finance. Like, things were getting a bit hot by that point. Sydney was starting to go through that run. They stepped in and made it really hard to borrow money. Election year made it even harder the year after to borrow money. Then we're getting to the point where Sydney and Melbourne have gone absolutely nuts, and by 2019 both of those markets declined in that year for a period of time by almost 15%. I'm hearing about the oversupply of units in Brisbane. I'm hearing about vacancy rates in Perth of 12%. I'm hearing about people leaving Perth, leaving Brisbane. Then we get to COVID, everyone freaks out about that. Then 2021, people are still thinking about that. We come up with another election. Then people start talking about interest rates. And I'm just like,
it's constant.
Every year, there's like 15 reasons to be absolutely scared. And there are times where I've just been flat out online, like on camera, you just should not touch this market because it's absolutely overvalued. I still completely feel that way about Sydney and Melbourne right now. But fundamentally, like, Perth, Adelaide and Brisbane look insane for the next 4 years. Whether they start going up in value now, I mean, they are increasing in value by 1% a month right now, so they are. But, or they pull back a little bit before they go. Like, this is an incredible buying hole, but this time there's no GFC to talk about. There's no COVID to talk about. This is purely media-driven fear, and the economy is in the worst / best position it's been in the last 15 years, depending on how you look at it. And it's super exciting about those people, particularly that invest in the next 12 months, of what their asset will look like in 3 or 4 years if they get the right one now.
And I think like the best thing for us was like looking back at that Homely article that looked at 46 years worth of data in the capital cities and averaging that 46 years of data out, and just seeing, you know, Brisbane, Sydney, Melbourne, Perth have all just done so well over the longer term. You know, 50 years, Sydney, Melbourne and Brisbane over 9.5%. Last 20 years, Sydney and Melbourne over 8%, Brisbane and Perth over 6% over the last 20 years. Sydney and Melbourne over the last 10 years have gone up by 100%. Brisbane and Perth sitting really flat. So we know the long-term trend is property values tend to increase over the longer term. It's been happening. And what makes me really excited is the fact that the Australian government wants to get the Australian population to 60 million people, almost 3 times what it's at right now. And I can't see us going back to living in mud huts or anything like that.
Happen.
People want a house over their head, and people want private ownership of the land. And that's going to constantly put pressure on those property prices. And you know, there's always going to be these external issues that are going to come up and make us second guess ourselves and you know, get a little bit scared. But rather than attaching to it, I think it's best to go into education, to go into history, to go into logic, understand the fundamentals of the economy, understanding the fundamentals of the property market, understanding timing, when to buy in certain markets, when to avoid buying in certain markets, and then trying your best to just make the most educated decision at any given time, because it's always going to be scary. It's never going to be easy. It's always going to be scary. It's just about trying to find the confidence that we can.
You know, like I said this recently to you, but when I read Opar's diary, he bought his home. I can't remember if it was $2,000 or $8,000 in DY.
I think it was £6,000.
£6,000, you know, 50 odd years ago. And at that time, he said, I have no idea how I'm going to afford this property. It's going to take me 32 years of my working life to pay it off.
Yeah.
That was how he felt about buying a $6,000 property on the top of the hill in DY, looking over the
1,000 square metre block.
It's just insane. Like, it's always felt like this. And I think a big part of this is a fundamental lack of understanding around how property has always, for the last, honestly, 1,000 years, taken the gains of society. So what people don't understand is that every time the government comes in to save and help property prices, like let's say at the moment the Labor government comes in and gives a 50 grand first timers grant, immediately prices will rise by 50k. Last year or the year before, when they came in and gave a $15,000 to $25,000 building boost in different states in Australia, building prices immediately went up 10 to 15, 20k. Now that there's been all of this money, like there is every cycle, previous cycle before this one is crypto, previous cycle before this was websites, previous cycle before that, I don't know what it was, but it was something, you know, all the way back to like cotton, and before that daisies in Holland. Like there's just always something, like, you know what I mean, circular wise. And so there's money being made out of thin air in crypto, and the majority of the crypto market, it's probably maturing a bit now, and there's some pretty smart people in there. In fact, a lot of the best investors in the world are there because it's the most volatile, there's the most money to be made.
I heard the other day in a podcast that 5% of people make 95% of the gains in crypto, 95% of people lose.
Yeah, that's about investing in general, isn't it?
That's wild, though.
It's like 1% of the people in the world have 90% of money, so it's the same rule of thumb. And it's how it has to be, right? There's got to be winners and losers. But again, what people don't understand, and if you follow the American media, like there's articles in Bloomberg at the moment where banks are starting to use crypto as equity for house prices based on a crypto price of today.
Yeah.
And so it's like this money is being created out of thin air. Let's say that there's 100,000 crypto millionaires made in the next year, and 10% of those people take their money and put it into property. Now, we've got countless clients that are already doing this.
Yeah.
Let's say that the stock market in Australia goes up 100%, or the stock market in America has just gone up 100% in the last 7 years. Some of those gains end up coming back. Let's say that wages go up by 30% in the next 2 years. Property is always going to be somewhere between 20 to 50%, whether it's the rent or the repayment to the bank of your wage, regardless of that is. If everyone in Australia today was earning $1 million right now from 100k average, property prices would reflect that 30 to 50% of that wage would be going to. And it's just understanding that property will always take the gain. And therefore, when these things come up around, I'm scared of this or that, like I understand the function of the economy so much better now. I understand that no matter what we do to try and make property affordable, investors are always going to increase the rent. They're always going to increase the house prices. And if you look how the system was fundamentally created like 300 years ago in America, it's to keep people, because we can't have slaves anymore, entrapped in debt. Because if you've got 30 years of mortgage, you've got to work for 30 years, and it keeps low-income earners making money for the economy to keep functioning. And it's horrible, but it's important to understand that this is how it's always been. And before that, it was like the lords, the barons, the monarchs, and like the big wealthy families globally for the 5,000 years before it. It's always been the exact same thing, and it will fundamentally always be this way, because no one wants to have that combo.
We need to segment these things like Ben's rants.
Yeah, this is just a fucking mad rant.
I love it though. It's so
I've been
cool.
reading with
But
too much Phil this week.
yeah, we have. It's exciting though, and I think, you know, the biggest takeaway is just like, you know, nobody can predict the future, but there is some really strong fundamentals and a very, very long history that suggests that property is a very high performing asset over the longer term.
11% a year for 100 years in Australia. Like, what? How much more?
And you can
data
leverage
do you
on
need?
that as well.
Yeah.
But anyways, like coming back to how to become financially free, overcome your challenges. That's one of the things. Then the next is like, well, what are your options as well? Because with property investing, there's limitless options. You know, you've got just standard residential investing, units, flipping houses, splitter blocks, larger developments. You can look into retail, commercial, everything under the sun, industrial, like all of these different options are there, and every single one of them has worked over the longer term. So you've really got to pick your lane and figure out what aligns most with your values, what aligns most with your goals, and most importantly, what will actually get you to where you want to be in the future.
How did you choose your lane? Like, how did you go, I'm not going to go for retail shopping centres, I'm going to go for residential homes?
It's plain and simply based on the path of least resistance was for me. It's like, okay, well, what is going to enable me to replace 150 grand at least worth of passive income in the future? And I decided to go residential houses. It's what I knew the best. It's what I felt the most comfortable with. Tangible asset, providing a roof over a head for a family, you know, something that I can see, touch and feel. I really like the idea of just standard residential houses. Now, there's different strategies that I personally implement with those residential houses, but that's just the avenue that I chose to go down because it made the most intuitive sense within myself. What about yourself?
You know, I like Resi too because 70% of the Australian market are not investors.
Yeah.
And so it is less fluctuating. It still fluctuates, but less. You know, I have tried personally, I think, buying, renovating, building granny flats, knocking down and rebuilding, subdivisions, building brand new dual income properties, flipping properties, Airbnbs and renovating Airbnbs, building Airbnbs. So like outside of like industrial, resi, commercial and sheds, I've probably tried most things. And I'm that idiot, like don't be like me because I was trying all these things without really knowing. I was trying to find my creativity in property versus my creativity in my life. So you've got a much better structure. And if I was doing everything again, I'd do it your way, which fundamentally is 3 great properties, all with potential to
manufacture value.
And you'll effectively, from those 3 properties, have 3 houses, 3 granny flats, most likely in some form or another.
Yeah.
Each renting for 50 grand a year.
Yeah.
For 50 weeks a year is that 150. And it's just, that is the path of least resistance. I can't find a simpler way to do it.
Yeah, like I think the most important thing for my strategy personally was timing. Like I wanted to get into the market that was the most affordable, that had the best growth predictions moving forward. I wanted something that was affordable but had those like fundamentals where I could generate some good long-term capital growth as well. Because I could have gone and bought, you know, a $200,000 or $300,000 property in regional Queensland and generated more cash flow, which at that stage in life would have felt pretty good, but that would have dramatically impacted my longer term position. So, you know, you sacrifice some little things short term, and I wanted to go for like the worst house on the best street that I could convert via a knockdown rebuild or a renovation to the best house on the best street, and then it's just sitting in the market and waiting for the market to do its thing over the longer term. And you know, I could have done what you've done, but obviously through your experience and your advice, it helped me frame my decisions and my strategy, and that's been really, really powerful for me. And now I can just kind of take a lot of the pressure off. And one thing that we've learned from a lot of personal development and a lot of just listening to other investors, other really influential people in history, what all these people say that the most successful people in life do is they become the master of one thing. They just focus on one thing. So I've replicated the same strategy for all 4 houses, exact same strategy for 4 properties. I haven't tried one thing and then gone to another like what you did at the start. You know, becoming the jack of all trades is going to put you in a position where you're never going to be truly the master of one, and you need to become the master of one thing. And what that does, it builds an amazing framework and foundations that you can then leverage off to try these other different things that might, be a little bit more in alignment with your passions. Because my strategy is boring. My strategy is not super exciting in any way, shape or form, but it's just the consistency. It's just the thing, that the path of least resistance that will get me to where I want to be. And I could have tried a lot of different things, and that might have made me feel a little bit more excited about everything. But it's just about the consistency, focusing on the one thing, and then just becoming the best that I possibly can at that one thing.
I love that, man, because your strategy, fundamentally the same as mine, is we want properties with potential for growth, capital growth, medium and longer term. We want properties that end up having exceptional cash flow, because based on our clients like Dave from Sydney, properties with great cash flow can also provide exceptional capital growth as well. If you look at Sydney houses with granny flats, for example. And then we want timing, which means effectively moving between Sydney, Melbourne, Brisbane, and probably Perth, and just following where's cheap, where's overvalued, avoid what's overvalued, buy what's cheap. And then the last thing that Simon and I do as more active investors, like with your own home, you bought a great block, a great position, the right time, with a great long-term history of performance, but you bought a place that you could fix up.
Yeah.
A lot of people don't want to do that. They just want a really, really tenant-ready home, and that's what we buy for 90% of our clients. That's what I buy personally now. But it's more like, you could fix that up. And with these other properties you've got two that you can knock down and rebuild. I think in one of your properties, I think you picked it up for like $350 or $370.
360, 380 and 460.
Okay, so like the 360 one that I'm thinking of, I know a house just down the street sold a year and a half ago for 1.35 mil. Bit closer to the beach, beautiful home, but you could build that home twice for $1 million, you know what I mean? And so it's exciting to have that upside if you're a little bit more active like we both are as well.
Yeah, and I like being a bit more active in that strategy. Like, rather than relying on the market 100% of the time, you can take matters into your own hands with situations like that. But certainly not for the faint-hearted, and it's actually an expensive strategy to use, but over time the numbers work out. So with what are your options, really refining it down to what works best. And, residential houses in major metro markets around Australia historically have been one of the highest performing assets in all the world.
I think two really, really simple strategies to implement that is either the 3 houses to financial freedom. So you simply buy 3 good quality houses in the market that you decide, or markets, and hold them longer term and own them outright. And at some point in the future, they'll have doubled in value. At some point in the future, you'll have paid them off outright and they're giving you income. Alternatively, you can do something a tiny bit more active like Simon and I have done, which is a house and a granny flat. And instead of having to do 3 houses, you can do 2, but get the identical rent return off a lower total asset base or total debt, which means you can get to financial freedom faster. Because let's say that you've got this house theoretically that once you knock it down and rebuild costs you $800,000 in total, just pulling a number out of the air. Then the house ends up renting for $600 a week. The granny flat ends up renting for another $350 to $400. And then the tax benefit from the brand new home, according to the accountant's report, might be, $8K to $15K per year in the first 5 years. So this one strategy where you spent $800K is now after tax giving you $1,100, maybe $1,200 a week in total returns. That's the sort of thing that means you can pay off the debt faster. Rents will go up, debt will come down, you can pay it off even faster, and therefore get financially free sooner.
And I think the secret to investing is just having that patience and just consistently working away at that plan, because this is probably the biggest reason why people don't become financially free, is they don't incorporate the habits, the sacrifices, and just patiently wait and consistently do those things over a 15-year period. Because 15 years is a long, it's a short time in the grand scheme of a 80 to 100-year life, but it's a long time when you're just doing the same things year in and year out with your investments. But You look at professional athletes, you know, they just do the one thing over and over and over and over and over again, and that enables them to become the best in the world. And if you can just sacrifice some things and just focus on doing what needs to be done, it'll work out. It has to work out.
You know, I look at the difference between professional and amateur in anything in life, and the only one difference is consistency. It's really it. It's just showing up, and professionals show up at 7 out of 10, but they show up more regularly. And I've been reading this book again, this Rest one, and it talks to that. It talks about the best violin students in the world and the difference between their habits during their days and in practice. And when you're practicing and when you're doing that thing, it is making sure that it's focused practice, and you're observing what you're doing, and you're critiquing what you're doing, and you're improving what you're doing consistently. And it's really simple, this stuff. It's really just a couple of great assets with a good debt reduction strategy. And then if you can add in things like timing and history, a good team of partners, and a good idea of where you want to be and why you want to be there, most of this, you know, I'm spending probably 1 hour a year thinking about my own investment portfolio anymore. And it's an intense hour. Like, it's a really like, what do I need to do to get to my next step? And then when it's done, most of the time it's just background noise, and I've automated my whole portfolio now, so I don't even have to think about management, don't have to think about invoices, I don't have to think about bank accounts, I don't have to think about rates. It's just all happening, and we hope that everyone can get to that point where it's easy and it actually happens in this lifetime for you.
I love it, man. I'm so excited about this journey and so excited about the future. Like, you know, I'm a natural optimist and just can't wait to see how it all works out. I'm still so far away from where I want to be. Like 5 years ago, I was hoping to try and do it in like 10, 15 years, but now I'm like, you know, if it happens 15 years from today, that's a 20-year journey. I'm so cool with that as well, because I'm
45.
I'm just at peace with who I am, with myself, with what I choose to do with my time, the people that I spend my time with, the things that I consume. And like, I know I'm going to hopefully live until I'm, you know, 100 years old, and I've got such a long time. And, you know, 15 years in the grand scheme of things is just a blip in the radar. You know, it's just such a short period of time. And it's like, I know I've got the capacity within myself to do this. So I'm taking it. I'm grabbing the bull by the horns and going with it.
I love that, man, because the reality is, this is one of the best quotes I ever heard from Dennis Waitley, who was the Olympic coach for 20 years. He said, you're going to arrive in 15 years anyway. Like, why not arrive healthy, happy, surrounded by good relationships because you've worked on them, and financially free? Like, why not have that the destination point if you're going to be 15 years older anyway? And Tony Robbins ripped that and said the same thing. Like, and I love this stuff. I'm so grateful to be on the journey with you. And for all of you guys, like, thank you so much for going through this with us. We're growing, we're learning, we're not always getting it right, but we are trying to fail forward and move forward. And we hope you're trying to do the same thing in your own life.
Whew, that's a wrap.
That's a wrap.
That's cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. That's so nice, eh? Oh.